Welcome to Goldstone Finvest. This is Prabhat Majumdar with the weekly market update. A Labour Department report showed producer price rose last month at twice the speed of February's growth, reviving some inflation worries. This despite US Federal Reserve Chairman Jerome Powell's assurances on Thursday that the central bank is far more concerned about the recent uptick in COVID-19 infections than inflationary pressures. US Treasury yield rose, hitting session highs in the wake of the PPI report, which provided further evidence that the world's largest economy was on a stable road to recovery from the pandemic. The dollar gained ground against a basket of world currencies, but the greenback appeared set for its softest week of the year on upbeat economic data and the dovish Fed. The dollar index rose by 0.17% with the euro down by 0.2% to $1.1888. The Japanese yen weakened by 0.31% versus the greenback at 109.60 per dollar, while sterling was last trading at $1.3727, down by 0.04% on the day. Crude oil prices dipped on rising supply amid a mixed picture on demand recovery from the COVID slump. US crude fell by 0.03% to $59.58 per barrel, and Brent was last at $63.17, down by 0.05% on the day. Gold withdrew from Thursday's one-month peak, weighed down by a rebounding dollar and rising treasury yields. Still, the safe haven metal appears headed for its first weekly gain in 3. India will recover fast like other economies like US, China and EU, and the economic impact of the second wave would be far lesser than the first wave. As far as India, one needs to differentiate between the first wave and this current new wave for the simple reasons that there were many unknowns last time. The market ended lower in the weekend, high volatility on the back of mixed cues including rising bond yield, RBI policy, rising COVID cases in India, and reports of vaccine supply crunch also added to the investors' worries. Last week, BSE Sensex fell by almost 438 points to finish at 49,591, and while the Nifty shed 32 points to close at 14,834 levels. RBI's Monetary Policy Committee MPC, as expected, left the repo rate unchanged at 4% and the reverse repo rate at 3.35%. The central bank's assurance of continuing with the accommodative stance led to a sharp vertical upmove on Dalal Street, even as concerns grow over the more aggressive second coronavirus wave. MPC maintained its gross domestic product GDP growth forecast at 10.5% for FY22. Going ahead, the updates on COVID-19 cases, vaccination drive and state government actions would be key monitorable for the markets. The Indian market ended in the red for the week gone by as rising COVID-19 cases weighed on sentiment. However, the losses were capped due to positive global cues and RBI's commentary that it is better prepared to combat the new wave of the pandemic. The March quarter earnings season is to start from the coming week, and the focus of the market will shift to that even as COVID-19 will remain on investors' radar. A major challenge directional traders face in the market consolidation is frequent stop losses due to market volatility. Options naturally as an instrument decays continuously, and with market volatility within a tight range makes it even more difficult to take directional trades. In market consolidations, it is very frequently witnessed wide swings in days high and lows, but at the end, the instrument may tend to follow minor to no drift. These are market scenarios where high-low has a lot of volatility, but close to close does not witness volatility. The end result is that directional traders lose in either way trades despite no net movement in the underlying. A few optimizations in stop loss levels can fix this problem to a large extent, since these trades are mostly short term. BSE Small Cap Index rose by 2.5%. BSE Mid Cap Index added 1.2%. The BSE Large Cap Index ended flat. On the sectoral front, Nifty Metal Index surged 6.6%. Nifty IT Index added 5.3%. Nifty Pharma has rose by 5%. In the last week, the Indian rupee plunged against the US dollar. It ended lower by 163 paisa at 74.74 per dollar. The week has been very volatile and the rupee has depreciated nearly 2.5% on the unprecedented bond buying by the RBI. Given the vaccination programs are underway, experts don't see too many corporates having any material drop in businesses. Our experts suggest that the traders are not too concerned about the earnings front. Any disruption is a blessing in disguise for great companies through market share gains. Hence, market is looking forward to the next 2-3 years despite the second wave of COVID-19. Weaker retailers get badly disrupted through such crisis, and that needs a massive scope of market share gain for the better quality retailers which can manage inventories and cash flows better and come out with massive opportunities to grow in the next 3 to 4 years. Nifty has to get past the 14,880 level to see a range breakout, and if that happens, the momentum is only going to get better for a move towards 15,500. In the last 7-8 sessions, it has been all about COVID-19 versus the earnings expectations, the liquidity aspect, and the fact that global markets have been very strong. IT and pharma are going to be the flavors for the next couple of months. This is an opportunity in auto, and some of these stocks can move up by 5 to 12% in the near term. The market is confused at this point in time in terms of the impact of the second wave of COVID and how that will impact the economy. For next week, there is strength in metals, but there could be a correction. However, the sectors which are showing fresh momentum are healthcare and public sector banks. While banking as a sector has been weak, the PSU banks have given some momentum turnaround on Friday by holding their weekly moving average. So possibly they could lead the way for the financials. So this could be the two sectors that market will look for immediate moves from here. As stated by Goldstone experts, traders should trade extremely cautiously with strict stop losses and follow support and resistance levels on strict basis. Follow support and resistance levels along with trading call as published on our Telegram channel. For regular updates, like, share and subscribe our YouTube and Telegram channel. Follow us on Twitter and Instagram. Also be a part of our Facebook family. Views by Goldstone Finvest. Let's build fortune together.